Okay, Asia session done. Took one trade on Nikkei. Nikkei hard time frame breakout levels are all bearish. Weekly, daily, monthly breakout levels are bearish. Peak buys are bearish as well. We faked out the previous month high, and we've also faked out the previous week high. Faking out the previous peak, that's the first sign of a reversal, but the reversal is not confirmed until it gets below the breakout level. So price already broke below the breakout level of the week, and it also broke below the monthly breakout level as well. These flips of breakout levels, going from a breakout high and trading underneath it, or going from a breakout low and trading above it, they only occur at swing points. They don't occur at any other point in the chart, only at swing points. Best trade setups for me are always at swing points. So whenever I see these flips of breakout levels, I'm always hyper aware of them because they create a peak formation, and I don't want to trade towards that peak formation. I always want to go against it. So yesterday I saw that move in New York and attempted to trade this setup. H8 high fake out right at the high of the day, entered as the M15 breakout level gets flipped. Again, these flip of breakout levels, flipping this breakout high and trading underneath it, they only occur at swing points, and this is why I attempted this move in New York. Unfortunately, there was no continuation, and I got taken out by a stop loss. Whenever I get taken out, I don't revenge trade. I don't do anything stupid. I just wait for my next setup. So today, still had the same bias as yesterday and was looking to sell Nikkei, waiting for my setup. Yesterday closed as an inside day. Inside days, I prefer to wait for the edge to get taken out. So I was waiting for this move up to fake out the previous day high to take it down, but instead it dropped down and broke below that H8 breakout level. So again, gonna reiterate this in every video. Whenever these breakout levels get flipped, these are possible peak formations, and do not counter trade these peak formations. So there was a peak formation on the H8, broke below that breakout level. So this is a false breakout on the H8. So breakout and then false breakout right here on the chart. Breakout of that H8 high, and then going below that breakout level is a false breakout. So H8 traders are in a false breakout cycle. What I was waiting for is a move up to fake out the previous high to take it down. So waited for price to fake out the M15 high in order for me to take this move down on the H8 time frame. So in this case, I dropped down to the M1 to time my entry better. And so this is the breakout, and I waited for the M15 to get faked out right here. And then the way I enter on the M1, just like on the M15, I wait for this the time frame last bullish breakout level to get taken out by a bearish one. So I got that over here, and then I always need two time frame alignment. So in this case, on the M15, I'm looking for M15 and H1 alignment. On the M1, I'm looking for M1 and M5 alignment. So here's the last M5 breakout level, and I waited for price to get below this level before entering. So entered as price broke below here, stop loss at the high of that structure, and then I was looking to take this down to the previous day low. Reason why I'm targeting the previous day low is because we have strong higher time frame on the daily, strong higher time frame confluence to push this market down, and I was relying on those higher time frame traders to push this market down to continue the trend. So ended up taking about 8R on this move. I actually targeted that H8 range low. It blew right by the previous day low. Had a really strong drop right at that previous day low. So I ended up taking profits as price reversed back to that H8 low. So right here, had an alert right at the previous day low, and there was this massive drop on that previous day low in 1 minute. And then as price reversed, I've said before, whenever you get these parabolic moves, even on the 1 minute, what you'll see is a quick retracement right back to that level. So once price broke below that previous day low and I saw signs of a reversal, ended up taking my partials here. So it took about 8.5. I took more than that, actually, about 9R on this one as it started to reverse and move my runners to break even. Reason why I'm taking partials instead of taking full is that hard time frames are bearish, and we've just flipped that breakout level. So this is a good opportunity to possibly hold for a longer term move. So about 8.5, 9R in this move, and that's it. One thing I wanted to talk about is yesterday I took the same idea and I took a loss on this move. It's really important not to revenge trade and not to force a trade, not to force the market to do what you think it'll do. And it's really important to wait for your setup to actually happen. If I had attempted a move down here, try to force a move down, I would have taken a couple losses here. And then this nice 9R move would be more of like a 5R move instead, because I would have taken many losses here. So really important not to lose your head whenever something like this happens. Even though I was so sure that this would have gone down to the previous day low, had no setups here, so did not want to take any of these moves. Other thing I want to say is that some people have trouble with my entry style. I'm always looking for breakout levels to be taken out. So my entry is always the same. I look for the breakout level, last bullish breakout level of the time frame to be taken out, and then I need 2 time frame alignments. So in this case, M1 and M5. But if you're finding that difficult, I used to trade the super trend instead. Super trend. Let me do this again. You have the super trend. If you set the factor to 1, you get this nice tight trend. It's based off ATR. You can research on your own what it does, but it's based off ATR. I much prefer this rather than what most people I see use, which is the 20 EMA. 20 EMA just calculates average. Average to me doesn't really mean much to me, so I much prefer the ATR. So this is another way that you can enter if you don't like to look for breakout levels and stuff like that. I much prefer to use indicators to execute my entries. The reason why is I don't want to be counting pushes or drawing trend lines or anything like that. I really want something that I can guarantee is repeatable. So whether it's super trend or EMA or breakout levels, find one way to enter and something that you believe in, something that you think you can repeat constantly, and then stick to that. I never like counting, pushes or looking for patterns, especially on the 1 minute. 1 minute, you can go crazy looking for these sort of head and shoulder moves or M's and W's and things like that. Much easier to take all of that mental strain away and leave the indicator to do your execution. So yeah, that's the trade that I took. Only took Nikkei, didn't take anything else. Gold, no setups for me on gold. Not really sure what it's doing right now. Nothing for me on gold. And then on GJ, GJ is a trend breakout, broke out below the previous day low and then broke out below another low. So whenever you break out below a previous breakout low and then you're breaking below a previous low, these arrows all turn into a new trend. And so could have taken this as a breakout trade, but I don't like to trade breakouts. I much prefer these pullbacks to fake out a high to take it down. So did not take GJ, although this would have been a possible trade I could take. 50% confluence on this one, so yeah, this would be okay. Not my preferred entry though. Definitely prefer a fake out of a high to take it down. So did not trade GJ, and I only took Nikkei and runners still going, and let's see if it wants to continue. And that's it. Now waiting for London.